Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is July 9th, 2019, and what we're going to look at tonight is coffee. The ETF is BJO. Now, what we have is a trend to the upside, but there's been a bit of a sell-off as of late, and it's kind of at a critical point. And so we're seeing with our technical rating that there's a little bit of confliction between what the technical rating is showing and what the trends are showing. Now, under that normal circumstances, we would probably be looking more at the trend itself, but we have a strong seasonal bias, but you'll see that it's more 21 days out than it is on the near term. We have a bunch of alerts that have occurred here just because of the strength of the surge we had in coffee and the reversal that we're seeing right now, that we're seeing a lot of our overbought type conditions, especially the ones that are slow moving. We always have the ones that go into overbought territory, and then when they start coming out of overbought territory, they're still overbought, and we're seeing the wave high and the slow rocket, which are more confirming type indicators that this really has topped out on the short-term basis. We also have a resistance gap, so there's a lot going on here with the market itself. If we even look at some of the deep dive patterns, you can see that on a daily bar basis that we had 2 trading days ago, a profit-taking condition. We have a pulse high, which also is more of a reversal type indicator. That is triggered here today, and then just recently, a day ago, yesterday, we had T-rope, and the T-rope is basically an alert that's telling us that we're hitting some support resistance in around the 200-day moving average. So basically, there's a lot going on with the market, even on a weekly bar basis. Now it's early in the week, and anytime you see a 0 here, that represents an alert that is still forming. It has to wait until the end of the week, but we definitely have a a flow profit taking for coffee that is also triggering. So there's enough saying that when you actually look at the market itself on a daily bar basis, this being coffee, you can see the rally, the reversal, the rally, and now we're in the midst of a little bit of a reversal right now. Now what's taken place here is this is that cross below that 200-day moving average, and that just happens to coincide with the resistance, and now the support at the time when it broke through it, now resistance. Now you can see that it broke through, came back up, it never touched the 200, but it's still kind of flirting with this resistance level now, which is at 108.53. And so under normal circumstances, we would expect a test of the 200-day or a test of the resistance level, and if things really follow suit with this bearish divergence that's underway, we'd expect the market to sort of taper off here for a little bit. And when I say the bearish divergence, you can see that we had a high in the market, then we had a higher high in the price action, but then what ended up happening is that it wasn't confirmed. We have a high, but we have a lower high when it comes to the alert, and a third one where it actually started to sell off as well. So there's a bearish divergence, which is giving more credence to the fact that we'll probably find a little bit of resistance, or a fair amount of resistance at this 108 level right through here, 108.53. So let's flip back to the site in itself, and let's take a look at the seasonals, which I said were positive, but they were a little longer term. So here's coffee. It's on the top 10 list. You can always pull that up. These are all the markets that you'd want to be looking at if you're in fact looking for a new market to actually trade. So here's coffee, almost top of the list. And if we actually look at coffee, we've got a couple of different charts we're going to look at here. We got the 5-year. So the blue line represents the seasonal tendencies over the last 5 years, since we're looking at a 5-year chart, and the black line represents the current year. And so what we would see with the next I'd say maybe a couple of weeks or so, is more of a sideways condition with the 5 years. The 10 years is a little more explicit, where it's expecting a little bit of a sell-off, but still a little sideways condition through here. And you can see that it's still in an accurate phase. That's what this kind of highlighted shadow area is representing. And the 15-year gives a better indication. It's got more data associated with it, and you can see that the trend is to the downside. It's not dramatic, but it's still a trend to the downside. So the seasonal tendencies, that positive, that's looking out further in the 21-day forecast than it is just in the next week or so. So I think that there's going to be opportunities to be had here. I'm not expecting a full-fledged reversal in coffee, but there is enough that there's a situation where we can at least take some profits and be short the market. And so with coffee, that is in fact what's taking place. Last night I did a webinar, or a little deep dive presentation here on cotton. I had said that if we broke a particular support level that we would most likely go short, which is exactly what took place. So we got a nice little open position profit there. That support level did not hold. And with coffee, we're short with a number of positions. We got 4 separate systems that are actually short with a nice open position profit right now in coffee. This despite the fact that it actually bounced up just a little bit today. And so what we would expect is, if we come back to the chart, if we should break above this 108.53 level right through here on a closing bar basis, then maybe one of the systems, maybe 2 of the systems would liquidate. But I do believe that the bias is more to the downside, and I guess what I'd like to see take place is maybe it comes down and approaches eventually over the course of the next 10 days, maybe 2 weeks or so, down to its 50-day moving average, and then we can start to see a little more of a rally to the market. But in the short term, we're short the market, and we would expect the market to sell off at least a little bit. So we've got a nice little open position profit given the fact that we had that nice sell-off just the other day, and we'll see how things kind of play out here with just a nice indicator where it broke below that support level. Traditionally, what you'll see is that it says it's gone too far, especially when you have a big bar like that, and it always wants to go back up and retest. Well, that's exactly what's taking place. Under normal conditions, we would expect this to fail and start to sell off. So that's why I would have you continue to look at the 50-day moving average just as a reference point to where the market theoretically could be headed. We've got targets that we could be looking at, but we'll look at those another day. I'm going to conclude here with a new series that I'm going to be doing. It's going to be maybe 12 weeks, maybe 14 weeks. I may extend it a little bit. And what I'm going to be doing is webinars on Wednesday, and they're going to start at 11 o'clock Eastern time, and we'll just do a half hour. Not going to be huge, long type things. We'll try to get right into the meat of the presentation and not really spend a lot of time on salesy type things. Really just get into the material and get out. And so we have a nice, at least our first one is listed here for July 17th, and I'll be adding more and more of these things. They'll follow a process that we'll go through, and it's basically looking at the analytics that we have for the markets. How do we determine these things? Give you a better feel for what the indicators look like, how do they reference, how do we use them in our day-to-day trading, how do we combine them together to come up with our analyses. In certain cases we want to look at multiple things at the same time, and so with that being the case, I'll show you step by step for each indicator that I'm always talking about, and there's going to be quite a few that I'll be referencing, about 14 of these things, and so there'll be a long series. So every Wednesday there might be a break in between every so often, but essentially 14 weeks worth of material, and it's going to be starting up here on the 17th. So I would encourage you to come to membership level upcoming webinars, and there's only the one there right now, but you'll see more and more as I post them that you can sign up. And if you sign up and you're not able to attend, not the end of the world. We'll send you an email with a link to the presentation, and that way you can watch it whenever you want. But it's just easier if you sign up for it, and that way we can at least get you registered. And if you can show up live, then great. If not, you always get that video recording and be able to watch it at a later time. But I think that by watching doing these particular webinars, you'll gain a little more insight, as more so than I can do in these types of presentations. And so I get a lot of questions from people, and that's why I'm setting up this whole long webinar series. So with that, I appreciate it, and we will take a look at some more markets here very soon. Bye-bye.